Hey everyone, I hope everyone's doing well. I just thought it'd be interesting or useful to go over some key points of the Exchange Commission hearing today and look at some of the points that Jay Clayton made during his testimony. I've highlighted some key things that I thought would be useful for you to see and point out specifically, and you need to pay attention to the language being used because I think it's really important and it's kind of obscured in the overall message of the testimony, which some people are taking as positive, some negative, some indifferent, but you really need to pay attention to some of the things that he's saying. So I've highlighted a couple of things just to make some key points. So first of all, Chairman Crapo, really Chairman Crapo. Anyway, so there's comedy in it, which no one was expecting. Okay, so first of all, the mission of the SEC is to protect investors, maintain fair, orderly and efficient markets and facilitate capital formation. Protect investors. So we need protection. So we can't make that judgment ourselves. We have to have a government entity doing it for us. Okay? So straight off the bat, he's really setting the scene for what the purpose of this testimony is. So there's obviously big numbers, and look at the numbers in the markets. It's ridiculous, like 75 trillion. And you thought Bitcoin and cryptocurrency market capitalization was high. It's nothing compared to these markets. The capital markets and money markets are insane. Okay, so moving on. So again, he sets out what he wants to do, utilizing a principles-based framework that has served American companies and American investors well through periods of innovation and change for 80 years. Bullshit. To be clear, I'm optimistic that developments in financial technology will help facilitate capital formation, providing promising investment opportunities for institutional, that is the key word there, institutional and Main Street investors alike. This has nothing to do with Main Street investors. You'll see that as we go through. From a financial regulatory perspective, these developments may enable us to better monitor transactions, holdings and obligations, including credit exposures and other activities and characteristics of our markets, blah, blah, blah. The key in there is monitoring. So do you understand what they're proposing here? Like, they're going to protect us because we can't protect ourselves. And because they can't really trust us to do that, they're going to monitor everything as well. If anybody has had any exposure, or worked or been involved in any financial institution, you'll know that the monitoring requirements, the regulatory requirements specifically, are insane. They monitor everything. Every transaction that happens in a bank, every trading transaction is recorded, packaged up and sent to the regulators on a daily basis and sometimes intraday. So it's not like the lack in monitoring, but clearly this is something they want to bring to the crypto space. Carrying on. So at the same time, that regardless of the promise of this technology, those who invest their hard-earned money in opportunities that fall within the scope of the federal securities laws deserve the full protections afforded under the laws. There's the language again, okay? We're here to protect you. Trust us. This ever-present need, comes into focus when enthusiasm for attaining profitable piece of new technology before it's too late is strong and broad. I mean, God help us. I mean, people want to profit. Shame on them. But this is true. Fraudsters and other bad actors prey on this enthusiasm. Absolutely. I agree with him 100% there. However, I would argue that it's not the government's role to protect us from that. It's our role as a community of people interested and involved in cryptocurrency to be on the lookout and to recognize these things. We need to educate ourselves and be on the lookout. It's not for the government to step in because we can't do it, because we can. Okay, carrying on. Message for Main Street investors. This is a really good one. My efforts and the tireless efforts of the SE staff have been driven by various factors, but most significantly by the concern that too many Main Street investors do not understand all the material facts and risks involved. There you go. You're too stupid to know all the things that are going on. So unfortunately, it's clear that some have taken advantage of this lack of understanding and have sought to prey on investors' excitement about the quick rise in cryptocurrency and ICO prices. I agree. They absolutely have. A lot of people have tried to prey on other people's stupidity and excitement. And a lot of people who understand what they're doing do get excited and make bad decisions, but part of life. Again, we don't need the government for that. Then there's some other stuff about, ask investors to use common sense, blah, blah, blah. Carrying on. So further, there are significant security risks that can arise by transacting in these markets, including the loss of investment and personal information due to hacks of online trading platforms and individual digital asset wallets. Stating the obvious. Of course there are security risks. But what he's done here, I don't even notice, he's collapsed quite a few different types of attacks into one big sentence that you should be scared. Because that's the whole point of this. You should be scared because, the big bad guy's out there, he can hack you. And then again, so he's talking now about wallets, and then he goes on to a recent study estimates that more than 10% of proceeds generated by ICOs, almost 400 million, has been lost to such attacks. Okay, and less than 2 weeks ago, a Japanese cryptocurrency market lost over 500 million in apparent hack of its systems. Yes, the flaw in all of this is it's multifaceted. It's not a single inherent problem with cryptocurrency. Hacking is a problem in every walk of life. Ever since we've had the internet, ever since we've had digital assets online, hacking has been a problem. Cryptocurrency is no different. So again, it's not. I don't think this is obviously relevant, but I don't think it's something new that's relevant to this space. It's out there, and it always has been ever since we've been the internet. I just have to point this one out. I like this sentence. In order to arm investors with additional information, SE staff has issued investor arts, bulletins, and statements on ICOs and cryptocurrency-related investments, including with respect to marketing of certain offerings and investments by celebrities and others. Celebrities has to mean Trayvon James. Come on, guys, it has to be Trayvon. He is a celebrity. So many more are promoted as providing the same functions as long-established currencies such as the US dollar, but without the backing of government or other body. Now, I'm with him on this one. He's correct. So, speaking broadly, cryptocurrencies purport to be items of inherent value, and that is true. I agree with him completely. However, if you can't see that yourself, or if you can't go and seek someone out in the community that you trust to give that opinion, again, why do you think the government's going to help you there? It should be obvious. If you understand the technology, you should be able to pick out scams and non-scams pretty quickly. You only have to ask a few key questions. Does it act like a currency? What is it doing differently than Bitcoin and other currencies do? Is it something I can use in my daily life, or is it something I think the market needs? Simple questions. Ask yourself. So, it carries on. Critics of cryptocurrencies note that the purported benefits highlighted by the proponents are unproven and other touted benefits, such as the personal anonymity of the purchasers and sellers and the absence of government regulation or oversight, could also facilitate illicit trading and financial transactions as well as fraud. If anybody out there can tell me where the dollar or the pound or the yen is also not used for illicit trading and financial transactions, I'd be glad to know, because every currency, even if we used bits of rocks as items or tokens of exchanging currency, the rocks would also be used to facilitate trading and illicit trading and financial transaction fraud. It'd be people selling hollow rocks that they say have come from a volcano that's been sanctified by God. It's been happening since time immemorial. Okay, then it goes on to talk about market infrastructure. So it's concerned that the appearance is deceiving. In reality, investors transacting on these trading platforms do not receive many of the market protections. Again, there's language protections that they would when transacting through broker-dealers on registered exchanges or alternative trading systems such as best execution, prohibitions on front-running, short sale restrictions, and custody and capital requirements. LIBOR, anyone? And there he is again, he's concerned for the Main Street investors do not appreciate these differences and the resulting substantially heightened risk profile. There you go. So again, you're too stupid and we need the government to step in. Carries on. So to this point, I would note that many products labelled as cryptocurrencies or related assets are increasingly being promoted as investment opportunities that rely on efforts of others, with their utility as an efficient medium for a commercial exchange being a distinct secondary characteristic. Now, I'm absolutely with him on this, because how many new coin offerings or new technologies have you come across that purport to be a currency, but it so clearly isn't? It's clearly a share or security in their company. So I'm with him on this. But again, that's up for you to recognize that. If you're accepting that Bitcoin or cryptocurrency should be, or its main value or main utility as a currency, you should be able to understand the difference between a currency and a security. So, for example, if you went and bought a share in a major company and then went into a shop and said, I want to buy 10 loaves of bread with a share, they'll say no, because that's not a currency. That's a share in stock that does have value. No one's arguing that, but it's not a currency. You can't readily exchange it. If they want dollars or pounds for that. Okay, so I agree with him there. But again, this is something that you should be able to decide, or we should educate ourselves to be able to recognize and not have to rely on the government for this. So he is just reinforcing what he said, that he stated previously that market participants should treat payments and other transactions made in crypto as if cash was being handed from one party to the other. So you can't have it both ways here. So again, you just look out for this. If we're going to treat currency or cryptocurrency as currency, that's what it is. And if it can't be treated as a security in terms of capital gains or capital realizing, if you're going to call it a currency, because fundamentally, if it's a currency, that's what it is. So we need to be clear again as a community what the utility of this technology is. If it's payments and it's a currency, great, that's what it is. Therefore, we should be resisting any tax on any gains because the currency has become more popular or it's become more valuable. So I think this is key, and everyone should really get their heads around this. So what next? So key question to all ICO market participants, promoters, sellers and lawyers, officers and directors and accountants, as well as investors should ask, is the coin a token or security? So he's just making the same point. And again, that's for us to decide, not for the government. So now and then he starts focusing on promoting. And again, he's making the distinction between whether it's a currency or security. And he's calling out what, and again, if you've got eyes, you can see for yourself. It is troubling when the promoters of these offerings emphasize the secondary market trading potential of these tokens, i.e. ability to sell them on exchange at a profit. One thing to be clear, they really misses the point of here. For a lot of people, that is the main reason why they're getting involved in this space. Not because they're interested in the technology, because they want to make a profit, because they see that maybe they have a rudimentary understanding of the technology, but they also know that it's very popular and it's highly in demand. So the chances of making a profit are there. And you can't really fault people who do that. If they pick the wrong ones, or if they invest in like Bitconrekt, for example, that is quite clearly a scam, then that's their bad decision. So, but you can't blame people for wanting to make a profit. If somebody was going to, if some company came up with a brand new technology that was completely different from cryptocurrency that everybody wanted a piece of, a large proportion of people would go into it completely blind and be motivated by profit. Some might get burned, some might not. But again, I don't think that is justification in itself to start welcoming the government in with the regulation and scrutiny, which will just throttle any kind of innovation, in my opinion. So again, another point on this, another point on the application of expertise and judgment is expected. I believe the gatekeepers and others, including securities lawyers, accountants and consultants, need to focus on their responsibilities. There we go again. You are too stupid to make your own decisions, therefore we need to herd all these people in. He's going to take a slice of your money. He's going to take a slice of your money. So is that guy. Their responsibilities is to protect you at a cost. Okay, so that should never be forgotten. The more people they roll into the space to protect you are going to take a slice of your profit. So don't forget that. So if you're welcoming, if you want the regulation in the space, say goodbye to a portion of your profits or income. That is all. It's clear. So he has urged these professionals to be guided by the principal motivation for registration, offering process and disclosure requirements, investor protection, again, and the particular protection of our Main Street investors. Again, you're stupid. I don't think I need to keep saying that. I've said it enough. You get the point. And here is a really big one for me. I do want to recognize that recently, social media platforms have restricted the ability of users to promote ICOs and cryptocurrencies on their platform. I appreciate the responsible step. Thank you very much for that, for removing a platform where people can actually advertise that they've got technology that they might want to sell. So without actually any verification whatsoever, it's just a blanket ban. You can no longer promote cryptocurrencies on Facebook or Twitter. Brilliant. Thank you for that. So again, what they're trying to say here, and the way they've compacted it, is you don't know what you're doing. We need to protect you, and therefore we don't want you to see these bad things behind the curtain. They're for someone else. We're gonna do that filter for you and make your decisions. Do you see what's happening? Okay, so now I'm going to give you a revelation about regulation. This might shock you. There's one group of people, probably the least obvious group of people that you might think of who actually love regulation, and I'm going to tell you who it is. Big banks and big corporations absolutely love regulation, and there's one really easy to understand reason for that. Because it throttles competition. So all the big banks, all the major financial players have had all research and development teams looking at cryptocurrencies for a number of years, and they already know they're already prepared to take advantage of the situation. They've already done proof of concept work. So of course they're going to welcome the regulators, or at least encourage them, because it allows them to continue to have a hegemony on the markets. It's plain and simple. It's not just this space; it's every other space. If you go and want a financial product, you've got how many companies can you go to? How many options have you got? It's very few, and it's always the big names. People will flock to the big names because it's supposedly safe, and the money's going to be safe in their institution. But what about the little guys? What about the little banks who might be able to compete on the same scale, or maybe even offer benefits? They're nowhere because they cannot afford to comply. Big companies have huge compliance departments that cost an absolute fortune. However, the cost of keeping the compliance department on the books is a lot cheaper than having to increase their product cycles or products in the market in order to compete in an actual fair marketplace. So again, you should never kind of forget that. You should always regulation is a double-edged sword. So on one hand, it might bring some stability, or you might think it might bring some stability, but what it's really doing is keeping the small players out of the market. So the last thing I want to show you is just to highlight all this is if we start welcoming regulation into the space, and they're going to start treating cryptocurrencies as actual securities, we're going to have to start playing by the existing rules of launching an IPO, which you might think, oh, that's fine. We'll cut out the crap ones and the ones who are obviously so dodgy, and we'll just get the best ones, right? Wrong. If you take a look at the process to launch an IPO, so I'm picking on the US exchange one just because it's relevant, because the SEC is obviously based in America. So if you want to do it just now, if you want to do an IPO just now, so if you had a company or a brand new company, you wanted to launch an IPO, you want to be listed on the NASDAQ or then the New York Stock Exchange, take a look at the requirements to get listed on that market. This is what you'd be facing if you've got a small team at the moment and you're investing or coming up with some kind of new crypto technology. You've got a fighting chance as it stands now to go effectively into the social media space and say, I've got a new idea, I think it's going to be cool, we need some time and money to focus on it and get the development done, let's raise some money by doing an ICO. Okay, and then you can be evaluated by the market, you can be evaluated by people who would look at your idea and consider whether it's valuable or not, and they would give you money based on the fact that if they thought it was valuable and if they thought it was going to make them money, if it was going to have a return value in short to medium term. If that option goes away from you, then your only option is to comply with the existing legislation to get on a stock exchange. Here's what it's going to take. These are a few different markets. So the global market. So here, an issuer, whether domestic or issuer or foreign, you must generally meet all the criteria under at least one of the 4 financial standards. Okay, so you must already have a bid price or an active private price, 3 or 4 market makers. So unless you know someone at JP Morgan or Merrill Lynch, forget about it. Corporate governance, hey, big deal. Have you got a corporate department, and have you got audit records back for 2 to 3 years? Don't know, maybe you have, maybe you haven't. But minimum income from continuing operations before income of taxes, 11 million, 2.2 million over the 2 most recent financial years. Good luck with that if you're just starting off and if you're a small company. So what this really means is, if you might think, oh, this is a decent measure because if you've got all these things, then it must mean you've got a decent product. Not necessarily. Some decent products might just need to be incubated to give you time to actually focus on getting the right team. But good luck trying to find venture capitalists who would touch you if you haven't got the experience, regardless of your product. Okay, so that's just one market. That's the global select market. There are others. So you've got the other global market. Again, different income standards, different bid prices, total shareholders, existing public shares. Then you've got the capital markets, which are the big ones. Again, you're talking millions, and you again have to have these market makers. This can't be underestimated. If you really want to get listed on an exchange, you have to have the support of a market maker. So again, if you don't know an executive or an investment banker at JP Morgan, you've not really got much of a chance. So this can't be underestimated. So you need to make a choice. Do you think the government are actually there to protect you and they want to make it safer for you to invest? Or the flip side of that is a complete throttling of innovation and just leave it to the existing players to continue their hegemony. So you'll continue to Facebook, Google, all the big players will just continue with the hegemony in this space and you'll have no choice. So you choose, what do you want? So I hope you found that interesting. I'd I'd love to hear if you have any other opinions. Just hit me in with the comments below. Good evening. Stay safe.